Hey guys, how's it going? It's Gary, and I was on my way out to an event this evening, and I was like, you know what? Let me just shoot this video so I don't have to worry about doing this in the morning. Cause I got a ton of stuff I got to do, and I got a few minutes here. So I know I normally do these videos for about a minute, minute and a half, but this might be a little bit longer because there's actually quite a few things that I want to share with you guys in this one here. So last Friday morning, I went to a BDO market update. And it was actually really good. Great information. So what I'm going to do is I'm going to kind of summarize it all for you guys, okay? So I took some notes. I'm going to look down a couple times because I didn't memorize it. I didn't have time to memorize it. So I think the most important thing, as long as you guys get the information, the content. So number one of the things that they talked about was the how long it's taking for some of these developments to actually come online. And what I found really interesting about this was that just from the time that they actually say go, and from the time that a client's actually able to move into, say, like it could be a condo, it's almost 15 years sometimes. And that's because there's so much red tape. So why is that important? And the reason why it's important because, as you know, or maybe you don't know, there's like 100,000 new people moving into the GTA every single year. And because of that, they've got to be able to bring online 50,000 new homes. Here's the problem. They're not able to do that. They're only doing about 37 to 38,000. So as you know, this is now going to will lead to what we're actually seeing right now is a housing crisis. And that's why the vacancy rates are so low. Now, the other thing that they talked about was growth and valuation. And where is that going? So, as you know, over the course of the last year and a half, 2 years, there was just three kind of major things that they've done. Number one, which was the Fair Housing Plan, which had to do with the foreign tax and rent control, and there was a few other things in there as well too. But those are the two kind of main ones. Then they also did the stress test, and then the third thing that they've done over the course of the last year and a half, they've done 5 interest rate hikes. Okay, so where is that going? Well, in regards to growth and valuation, because of that, they're saying that what we're going to see now is a little bit more of a sideways kind of a trend, maybe a little bit more. So you're not going to see that appreciation that we've seen over the the last, say, 8, 9, 10 years. Okay, it's not going to be there. So if that appreciation isn't there, well, what do you do? What type of investment properties do you buy? And if you guys ever have listened to what I've been saying over the last several years, it's cash flow. And now more than ever, there's lots of great opportunities out there. It doesn't have to be right in Toronto. It could be just on the outskirts, which we're doing a lot of investing. And listen, we're big on Peterborough, but we're also even moving into some of the other areas, which are giving us some fantastic cash flows out there as well too. And the last piece that I want to kind of talk about is interest rates. And I think that's something that everybody's always really kind of, whether it be nervous or definitely interested about. And what they said, and this is not a secret, I mean, you guys can find this stuff online, but the Bank of Canada, where they want to see interest rates, so right now we're at 1.75, okay? And where they want to see it is around that 2.5% to kind of 3% mark. They don't want to go any higher than that. That's where they want to land. And I think that's where they're trying to get to. Now, when are they going to get there? They're saying sometime maybe next summer. I don't know if it's going to be there next summer. I think it'll probably be later than that. But here's the thing to understand, because I know a lot of people get freaked out and like, oh my God, higher interest rates. But see, higher interest rates is not that bad if you really kind of understand it. And what I mean by that is here's what higher interest rates do. Is yes, your payments are going to be a little bit higher, but vacancy rates are also going to be even lower because families that were trying to get into home ownership can't. And what are they going to do? They're going to have to rent. So that now means there's a larger renter pool out there. All right? And that's about it. So that's my Gary Hibbert market update. I hope you guys got some good information out of that. We've also got another market, a bigger, more in-depth market update that we're going to be doing next Tuesday at our mastermind event. If you guys haven't registered for that, please do. It's at our website, smarthomechoice.ca, and I will see you guys hopefully next week. Take care. Talk to you soon.